amount that you'll be getting. Okay, now we have been talking about differences between retail price and cost. Basically, the official term for the differences here is called gross profit. Okay, so those two entries that are captured in sales transaction, the dollar amount differences, and then after we accumulate many different transactions that happens, altogether the differences between retail price and the cost altogether is called gross profit. Okay, now don't confuse this with net income. This is not net income. It's not there yet. Okay, net income also captures all the other expenses in the middle. We still have rent expense, advertising expense, insurance expense, other types of supplies expense. Gross profit, by the time we calculate gross profit, this dollar amount only considers one expense account, only considered cost of goods sold expense. Okay, but cost of goods sold compared to other expenses is the majority amount of the expense. You will see it's significantly more than others, significantly higher than others, because it captures inventory's cost. Okay, all the others compared to cost of goods sold would not be as high as this. So this typically is a signal of whether or not the company later on will be getting net income, because if gross profit is readily, let's say, negative or even close to zero, then there's no way that later on there will be a high amount of net income. Okay. Company captures net sales amount minus cost of goods sold, just one simple inventory expense account. Then from gross profit, we'll be subtracting all the other operating expenses. Then you get to net income. Okay, but if at this stage, when you get to gross profit, if it's already pretty low, then there's no way that their company will be getting a high amount of net income later. It would only be less than this. Okay, so gross profit typically is an indicator of how well the business is doing at an early stage before capturing all the other expenses. You'll be able to sense and also compare to early periods. If gross profit has significantly decreased, then you know this season the company has not been selling as well. Regardless of whether it's the price or the amount, altogether if gross profit compared to early periods has been reduced a lot, that means this season the selling events has not been doing as well compared to the past. Okay, so the official definition here is the extra amount company received from customer over what they pay to vendor, but really what they're saying is just the differences between cost and retail price. Okay, so for example, if the cost of purchasing a CD is $15, later on company mark up a price for each and every CD to pay $20, customer pays $20. Then for each sales transaction of one CD, you're getting $5 of gross profit. So if you sell 2 CDs, you're getting 10, 3 you're getting 15, 4 you're getting 20. Overall gross profit will be capturing the differences between the total cost and the total sales revenue, retail price and cost.